Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, May 1, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, today we had Kabuki Theater Day. What exactly is that? It's the FOMC announcement followed by Jerry's presser. And basically, by the end of the day, they were down a little bit, but certainly we weren't disappointed at the volatility that came this afternoon during Kabuki Theater, which I like to call and did call today for Inside the Number members and the live room members, a spectator sport. It's not really a tradable event for most traders. When you look at, for example, even a 5-minute chart, this is hardly a tradable event, at least for most traders. Look where they went to. They almost went back to 509. But let's take a look at what they really did so we can learn something. We'll use this as a lesson. So what did they do actually is went back to run a test of the 20-period moving average, which happened to coincide with a breakdown candle high area. Not the high, but close to the high. Remember, traders from the Lazy Swing Trader product got the SPY short last Friday. In the live room, we talked about how I was doing it with put options. They're up about 40%, give or take. Nice trade. From an option perspective, I did book some profits this morning under full disclosure so traders understand. I took a portion of the position off this morning to book some profit when I was up almost 40% in 2 trading days. Traders in the live room had a bit of a bonanza with that one. Where do we go from here? Well, we don't know how they're going to open up tomorrow, but this is certainly a bearish wedge pattern that ran a test of 2 important places, the 20-period moving average, which they couldn't get back above, and the breakdown candle high from yesterday, which they couldn't get back above, and they failed, finishing on the low of day. That's not a positive for the market, but on its face, just taking the market at face value, being the umpire, calling balls and strikes, that is a negative development, especially what they did into the end of the day. Look at the last half an hour of trading. Last 2 15-minute candles, they had an all-out collapse, which tells you this run-up was nothing other than Kabuki Theater, shakeout or shake-up operation, suck in the longs, pull the rug out, and of course issue a whole conveyor belt full of pies in the face. All the more reason why I pounded the table this morning and told traders in the live room it's a spectator sport. You're running out of time on the clock in the day. So if you take a trade late in the afternoon, around the Fed, right before the Fed, after the Fed, now you're up against the clock. What do you do if that goes against you? Do you choose to hold it overnight? Do you take a loss? All those things are human emotions that come into play taking a trade with limited time on the clock. Write that down, put it on a sticky note. We had a monthly close yesterday. The monthly closed from an official standpoint, and Chad in the live room brought this up today. The monthly chart closed, or the monthly SPY chart closed, with a reversal candle of last month. It's not an end-all, be-all. It doesn't directly tell us anything, what's going to happen tomorrow, next week, 2 weeks from now. It's information that we put on the table. It's one of those puzzle pieces as we begin to put the pieces together that shows us the picture, the image of what's actually happening in the market. We put it together one piece at a time. From a weekly chart perspective, what am I going to be watching by the end of this week? What do they do with last week's low and that 20-period moving average on the weekly chart? Do they hold it? Do they give it up? That's what's important on my mind from a weekly chart perspective. What's more, any trader that's taken the Lazy E-mini Trader course will recognize that we had an on-time type of situation on Friday. Now we're trading down below the moving averages, at least the 20 and the 50. In a bearish wedgish formation, decent volume on the downtick means we had some institutional sponsorship / participation All these things support the bear case. Can they gap them up tomorrow and just take off to the upside? Anything's possible, but the way they closed them today portrays a negative outcome. It's not how they open them. It's not how they trade them throughout the trading day. But most important is how they close them at the end of the trading day. Another sticky note item. What's going on here with Chevron, CVX? This is off the swing trader list. This is the Automagical Swing Trade Algo System. Sell short issued alert over here a few days ago. The alert went out on the 26th on this hit of 166.83. Today was the first, not the last, but the first profit target on the short trade. The rest is now what? A risk-free, emotionless trade. We have shorts out there. We have longs out there. Here's a long trade example. Automagical Swing Trade Algo System. Bought American Tower, AMT, a couple of weeks ago, 171.99. They hovered, they tested it, they treaded water. Finally, today, they started rallying and they got to first target, creating what? You got it, a risk-free, emotionless trade opportunity. First profit target today. This was a long, the other is a short. We have them both. We take advantage of two-way markets. What was going on today inside the numbers? It's hump day, kabuki day, FOMC, and Jerry's presser. So we're looking for a morning rush, and then the market's going to go to sleep, and you're not going to do anything in front of the Fed, all that stuff. I was looking for this. 499.60 is important, magnetic, support, and the early pivot. We had a zone. It was down about $1, a little more than $1, down to 498.45. That was my buy 'em up for a snapback in the other direction. Of course, we had the thieves in the morning show up before the opening bell. And you can see here, 499.60. Sometimes they come up short. Other times they spike them through. Remember, pause the video, read the notes, go back to the chart, and double check the work. Right of the vertical is today's activity. And as you can see by the horizontal line at the bottom, 499.60, they just didn't give it to me today. We did have some traders that stepped in around 500 this morning. They got a bounce. They got a positive trade out of it. We had some spike the low traders. They got a positive trade out of it. I was left at the altar waiting for 499.60 or closer yet. The low of day was 499.87. That's the way the cookie crumbles. It's the life of a trader. What traders also knew, those that wanted to play a pop after, before, during the Fed announcement, and there are some, they understand. We had this conversation at length. We do it each and every time there's a Fed meeting. Whatever you're doing, if you're taking a position around the Fed meeting because of the Fed meeting, you must realize and have the awareness it's just a bet. It's not a trade. It's a bet. You have an understanding of what you're doing, that's fine. There's nothing wrong with that as long as you separate the two between analytical trading and betting. Probabilistic trading and betting. Those are two different things. So we knew the resistance was around 502. That was on the board first thing in the morning. First place they went to on the Fed pop was where? 502. Funny how that works. Pulled back, then they barreled through it, and the rest is history. We did have some other numbers on the board, but you can pause the video, read the notes, go back to the chart, and double check the work. We also had a list of stocks on the move today. We're going to look at all of them except CVS. CVS opened below the third suggested entry, that is, and therefore it was off the board. Pardon me, technically it opened a couple of pennies above, therefore it was on the board. You see what happened. They went lower, they bounced back. No great shakes one way or the other, CVS. But we'll take a look at AMD, Starbucks, Skyworks Solutions, KHC, and Estee Lauder. We'll look at the good, the bad, and the ugly. We'll keep this one simple. 134.12 was the third number. They blew through everything like a hot knife through butter. And the trade, the numbers in Estee Lauder, EL today, were wrong. That means I was incorrect. So this one's a shitburger. It's a stop out. AMD, 144.30, 142.10. You see what happened here. They came into the zone. They found support, turned around, went back up in the other direction, and they gave you the deal. Other than Estee Lauder, the numbers work. About Starbucks getting a buzz cut at the open? 74.45, 73.42, 72.63. These are all important numbers independent of one another. You could see they bounced at the first, bounced at the second, bounced at the third. It's a support zone. Where'd they go by the end of the day? Back to the first. The numbers work. About Skyworks Solution, SWKS, 91.05, came into it, bounced up, gave you the deal, and then some. The numbers work. KHC, 36.82, 36.18, blew through the first, came to the second, found support, worked their way back up. No great shakes, but the support zone definitely was a support zone. What's going on over in Camp IWM? Same routine as the spiders, just slightly different. Not only did they spike up to get back to run a test of the convergence of the 20 and the 100 period moving average, but they also filled a gap left open up here. The gap was at, the closing print is 199.96. Today's high, 232. They filled the gap and they collapsed back down. It's still a bearish, wedgish type of formation. Again, with the weekly close, Friday's close, not tomorrow, but Friday, we'll be very interested to see where they close relative to last week's low, the 200 period moving average, or in the other direction, will they get above the 20 period moving average? Who's to say they have to go down? They could still go up for the rest of the week. There's no rule that says they have to go down. Poor close today, yes, but we've seen this over and over and over again. There's a fake out for the fake out for the fake out. It's like those Russian dolls that keep coming out of the bigger one. There's always another one underneath. There's always another fake out operation on deck. What about the folks down at the transportation department? My favorite canary in the coal mine, second favorite market leading indicator. They're already at new lows. Just looking at this chart, independent of everything else, it's already telling you there's trouble below all the moving averages, a new low after this bounce that didn't even get back to the moving averages. Weekly chart giving up the 50 and the 20 period moving average, heading down to the 100 period and that magical 14.4 we talked about last night. Canary in the coal mine. Anything different in Q land? Not so much. Tested the moving averages in the vicinity of the breakdown candle high from yesterday, and they collapsed back down along with everything else. Today was a good example where it's all the same market. When everything rallies, everything rallies. When everything sells off, it sells back off. That's just the way it is. Same routine on the weekly chart. We'll be focused on last week's low, or can they recapture on weekly close like they did last week, or they give it back up, the 20 period moving average. Now, understand the 20 period moving average on this weekly chart isn't that important anymore. Why is that? It's important from a moving average perspective, but not from a trading perspective. We use it as a guide, but we can't use it as a trade, meaning they hit the 20, therefore they should bounce off of it. No more, because they've been back and forth through it for 3 weeks. It diminishes the importance of said moving average. Financials below the moving averages, they are in a bullish pullback formation. However, below these moving averages, they are susceptible to fall, and we're going to use these lows from a couple of weeks ago as the bogey. Weekly chart, they're above all the moving averages, so the trend is your friend. We're watching 2 weeks ago low and that 20 period moving average by Friday's close. If they're down here by Friday's close, that's obviously a negative development. However, they're above all the moving averages, so what we can say is from a weekly chart perspective, yes, we're in a corrective mode. However, there's nothing wrong with this tape. There's nothing wrong with the XLF chart. They're above all the moving averages. The trend is up within a corrective formation. That is information, is factual information. What do we have when we look at the monthly chart? Well, the first thing that my eye gets drawn to is this high over here, and you have what is called a false breakout attempt. Closed above it for the month of March, and then all of a sudden in April closed back below it, meaning the former high. That's a negative development from a monthly chart. You're well above all the moving averages. However, this is a false breakout that could be a negative development as time goes on. We'll have to see. Smash mouth, the Philadelphia Semiconductor Index, which is a pretty darn good proxy for the tech space as a whole, got slammed today down almost 3%, $6.24. Same routine, bearish wedge, they're falling. These things take time, they go back and forth, but this is falling away from these moving averages. Today, they were only able to fill the gap. They couldn't even get back to the 20-period moving average. This is a weak chart. The 100-period moving average down here is not the same type of support. Would have been support had they hit it down here a couple of weeks ago, but now since they came close and rallied away, they reset the tape, they recocked the gun. This is no longer the same type of support that it was a couple of weeks ago. Write that down, put it on a sticky note. First time, best time, something we discuss ad nauseum in the live room each and every day. We talk about a lot of stuff. Meanwhile, little housekeeping, Jordan will be taking over the live room on Friday. Inside the Numbers will be closed on Friday, and Jordan will keep the live room open. He will be the moderator. You get a different flavor with him. He talks about options and talks about a lot of other things that he looks at that are different than I look at. Traders get a wonderful, different perspective on the markets. He knows his stuff. I always get a good review after Jordan moderates the room for a day here and a day there. What I get from traders in email after the fact is, Jordan did a great job, all is good, all that kind of stuff. So that makes me feel good, gives you the opportunity to get a different flavor. And the third leg of the wheel is Jordan likes doing it. Meanwhile, have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.